Hello, good morning and welcome to ET Now's Buy Now, Sell Now with me, Varun Hiremat, and along with me, Karunya Rao. Let's take a look at the headlines for this morning. We are unfortunately near the day's low. Nifty is hovering around 11,900 and no positive uptick seen in the market. We did have a weakish global handover from the United States futures last night, and Asia was pretty mixed this morning. Hence, I can understand why the market sentiment might be slightly lackluster this morning. Then moving forward, a very important deal that was in the works impacted the stock price of future group companies, impacted the stock price of Reliance, now seems to be possibly on hold. The future RIL deal has been stalled as Amazon, who was also an investor in Future Group, let's remember, is using all possible legal measures to potentially put a roadblock for this transaction. So we'll be bringing you more and more updates on that as the day continues. We then have a very important stock in focus. We have Nestle, brokerage upgrade coming in from CLSA to outperform from previously sell, and then JP Morgan maintaining an overweight with a target at 17,200 rupees per share. This is obviously post the Q2 numbers which were out recently, and those are some house views which we'll be bringing you more of later as well. We then have earnings in focus today. Let's remember, this week is very important for earnings. 33% of the Nifty weightage reports earnings this week. Today we have Kotak Bank and M&M Finance, two big majors from the financials sphere, which are going to be giving out their results. I'll be walking you through a preview of that as well later on in the show. But let's go across to Karunya now for a comprehensive check on the markets as well as our quiz teas.
Right, before we do that, let's quickly pull up the quiz of the day as well. How well do you know the markets? Can our viewers spot the big trends on D Street? Please participate in the D Street trivia on Twitter. The quiz is still live. You can log into Twitter, go on our handle, that's ET Now Live, and participate and post your answers as in the comment section. We asked you today which of the following retailers had the lowest revenues in FY20, the options being Trent, ABFRL, V-Mart and Shutterstop. So yes, we'll be revealing the answers at the end of the show around 11:45, so you have time still to participate and send us your answers. Meanwhile, looking at the markets, as Varun had also flagged off, the handover was quite weak. Right now we're trading just along the flat line for the Nifty with a loss of about 31 odd points. Sensex losing close to 100 points as we speak. 40,590 is where it's perched at. Broader markets also looking pretty weak and lackluster. Small cap index managing to hold its head above the water, right now in the green, but the quantum of gains is very, very marginal. Mid-cap index also losing about 0.5% in trade. So as far as sectoral performance are concerned, Nifty Auto seems to have taken a bit of a U-turn after seeing that massive uptick on Friday. Right now the index is down 1%. You have Nifty Metals bleeding away, down 2%. Nifty IT, Pharma index and even realty space, some individual names are really sulking big time as we speak. But on the flip side, what's capping the downside is PSU banks, banking space at large. Actually, Nifty Bank is also in the green. Private sector lenders, some of them are doing well also, and so is Nifty FMCG. As far as individual gainers are concerned, Nestle top gainer on the Nifty 50 index, up 3%. You also have IndusInd Bank up 3% almost as we speak. HDFC Life, Adani Port, L&T all up in the excess of 1.5%, and the likes of HDFC Limited, Power Grid, Ultratech, IOC, they're also gaining more than 1% each. On the other end of the spectrum, you have JSW Steel, biggest laggard in trade, though the numbers were quite good for the quarter gone by. The stock seems to be trading quite weak, down 3.5%. Hero MotoCorp is down 3% as well. There's Coal India, Reliance, Tech Mahindra, UPL, Hindalco, Bajaj Auto, Tata Steel, Asian Paints, a host of names in fact that's trading with a loss of more than 1% each in trade. But largely as far as the advance decline ratio is concerned, definitely in favor of the losers. 21 stocks advancing in trade while 29 seems to be dragging. Varun.
Okay, thanks for that, Karunya. It's time to talk technicals and fundamentals like we do every day here on Buy Now, Sell Now. We're joined by AK Prabhakar and Kunal Bothra. Good morning, gentlemen, and thank you for joining us. As always, great to get your perspective on things. Mr. Prabhakar, I'll come to you first. What's catching your eye today in the market? Which way is the trend moving? And in line with that, what is your high-risk and low-risk idea for our viewers?
Good morning. See, for me, Nestle came with a fantastic result. It is not about the result. In the last 9 years, they have invested almost 2,600 crores in India. But this time, in the next 3 years, they say they will invest 2,600 crore on expansion. So I think that is where I think the re-rating will happen. So they had a sales growth of 10%, but profit after tax didn't improve because of the tax adjustment. But I think going forward, for a company like Nestle, if they are able to grow at 10% CAGR, it is a great, to invest in those kind of companies. And I like agrochemical companies. After a very long time, Bayer Corp and even Dhanuka PI Industries have started to perform. I think these stocks would give 10 to 15% return in the next 6 months.
Okay, great, sir. And what's your high-risk and low-risk idea for this morning?
I don't think I can give, for an intraday purpose, I cannot give. APLL, Alembic Pharma, came with a fantastic result. So I think, post-result, it is taking time to start up move. But, they came with a QIB, where they raised 750 crores, due to which their debt also has come down. It is 327 crores net debt company. But their margins have started to improve. They have an EBITDA margin of 30%. So I think Alembic Pharma APLL looks good to give 40% return in next 1 year. So that is one stock I would recommend. Maybe for Diwali also I think 5 to 8% upside is possible. These are few picks which I can suggest for medium to long term.
Okay, great, Mr. Prabhakar. Thanks for that. So Alembic Pharma looking good according to him. 40% upside possible this year for all our viewers. Do have a look. Kunal, hi, morning. What's on your radar? A high risk and low risk for our viewers today?
Good morning, Varun. Good morning, everyone. So, two buy calls. First one is, in fact, both of them are moderate risk ideas, and my sense is that the index is consolidating. I think this consolidation is very high probability that the mid cap end of the market could probably see a continuation rally. So I've picked up two buy calls. First one is about Bajaj Consumers. The stock is placed approximately at 188, 189 levels. It's trading above the 200 moving averages. Again, short-term patterns already indicate a strong revival into the stock prices. So I would sense Bajaj Consumers could be a good buy at current levels. Targets could be kept at approximately 200, stop loss at 184. And the second would be a Barn Crompton. Now, I'd given this buy call 2 days back as well, when the stock was at 289 levels. The stock has moved up quite well from 289 to almost 330, which it tested day before yesterday. I think the stock should see a continuation move on the upside. We've seen very good volume breakouts, and the gap which was formed for Crompton Consumer, I think 2 days back, I think that gap is now an important support level. So keeping that as a stop loss range would suggest a buy on Crompton. Targets to be kept at 330 and stop loss at 303 levels.
Okay, great. Thanks for that. Time for a quick break here on Buy Now, Sell Now. We'll be back with more market-related updates soon. Don't go anywhere.
Welcome back. You're still watching Buy Now, Sell Now on ET Now. Kunal and Prabhakar both are still with us. Let's ask them to help our viewers out as well with their queries. First up is an email from Vikram Singh of Jaipur. He wants to invest in Tata Motors at the current market price for a short-term time horizon. What's the advice, he wants to know. Kunal, Tata Motors has seen a decent run up in the last 2-3 weeks from 120 levels to now 135, 136. For a short-term standpoint, from a trading standpoint, would you recommend a buy?
I think purely from a short-term trade, I think 120, 125 seems to be a strong support zone. So I think start of September or mid of September, the stock had bounced off from 120 or 121 support. In the month of October, when we had the correction for the stock as well, it managed to bounce up from 125. So the supports are rising for Tata Motors, but the supports are still strong at those 120 and 125 zone. Now the stock is almost at 140 levels. 140 is what it tested today. It's now cooled off. But I believe that largely, if you're looking to buy from a short-term play, the risk reward is not suitable to buy at current levels because the stock still seems to be in this 15 to 20 point band, 120 and 140 largely seems to be the band for Tata Motors. So I would not advise a buy at these levels. It could be a good buy, but I think if it comes back to that range of 120 and 125.
Perhaps Vikram could wait for some more time before dipping in. Prabhakar, what is your view on Tata Motors? And of course, the impending partnership for their PV business is something that the street has been waiting for. Earlier on, they had denied, but now again, reports are resurfacing that they're actively looking for a partner for their PV business. Once that is done with, how do you see the fundamentals play out for Tata Motors?
When they get a partner for the passenger vehicle, then it is very good. Till then, I think they are in multiple geographies, so it is very difficult to assume a lot of things in a company which is multi-regional. So I think I would avoid the stock. I would rather buy a Indian focused stock like Maruti or Hero Motor, where their focus is India. India is the biggest growth engine in the world. So I will always focus on India focused companies rather than getting into companies which are focused on China or other global parts, where it is very difficult sitting here to analyze multiple things.
All right. Thanks for that, Mr. Prabhakar. So, it's interesting what you just said because our next company query is revolving around a very global company which has many moving parts. We're talking about Motherson Sumi, and Shikhar Srivastava of Lucknow has written to us. He's bought in 200 shares of Motherson Sumi at 225 rupees per share. He'd like to know if he should continue to hold or exit. So since you were just speaking, Mr. Prabhakar, let's touch base with you first. It is a very global company, many moving parts, many different independent markets. What do you think about this one?
It is even more difficult than Tata Motors because almost 170 countries they have, and the number of parts also. It is very difficult to analyze these kind of company, and somewhere some problem the stock will react negatively. So I think I would rather be in a company where they have a very India focused business, or they export from India. I would be rather happy with that. So I would avoid Motherson Sumi for this reason. But there are other companies which can fit the bill. I think Johnson Control, Hitachi, they are having a plant in Gujarat, and their AC plant is likely to be made in India. So I think that will be a better fit. Or any company, like Crompton, Kunal was mentioning about Crompton. Their sales was very good, 23% increase in fan alone and in other home appliances. So home appliances focused in India would be a better choice for me.
So you prefer the appliances space over something like Motherson Sumi. Kunal, let's come to you. How's that chart looking, and what's your take on? Do you also share Mr. Prabhakar's cautiousness regarding these companies which are spread all across the globe, or do you think Motherson Sumi is good at the current price?
Yeah, there is a lot of caution over here, Varun. But you look at the chart patterns over Motherson Sumi, it's underperformed significantly as compared to the auto ang space, particularly. So the stock has been largely in this range. I believe as a trading play, I think the buying range for Motherson Sumi should be around 95 zone. I think 95 or sub 90. I think that should be the zone where if the stock reaches in that kind of a territory, there is a lot of demand which comes across at that level from Motherson Sumi. So I think that's a good support zone where you should look to buy rather than buying at 108, 110 levels where the stock is currently trading.
Okay, thanks then for sharing your view with us on Motherson Sumi, as well as your tips at large and helping our viewers out as always. Thank you, Prabhakar and Kunal, both of you, for joining in. Okay, let's move right on to a big story, the one that we broke right here on ET Now. The Singapore International Arbitration Centre has passed an interim order asking Future Group to put its plan of selling retail business to Reliance Group on hold and wait for final judgment on the plea filed by Amazon. Nayantara has all the latest on that. Let's take it across to her.
This is a big corporate battle. On one side, you've got Jeff Bezos, the world's richest man, and Amazon. On the other side, you've got India's richest man, Mukesh Ambani, and Reliance, and it's all to do with the Future Group. So Amazon got a temporary reprieve via an emergency arbitration interim order in Singapore, which had put the 25,000 crore rupee sale of Future Group's assets and businesses to Reliance on hold. Late last night, Reliance Retail made it categorically clear in a media statement in black and white that this interim ruling is not enforceable in India, that has done all of its due diligence, and it will be proceeding with the transaction with the Future Group without any delay. This has been followed up with Future also coming out with a press statement today in black and white saying it will be proceeding with the transaction with Reliance without any delay. Goes on to say that Amazon invoked arbitration with Future Coupons, and Future Retail, which is selling its assets and businesses, is not even a party to this, and therefore how can it not continue with a transaction which is in the interest of all larger stakeholders? So this is how it basically sums up at the moment. Round one went to Amazon, it won it with that interim relief, but both Future Group as well as Reliance saying it's not enforceable in India. They're proceeding with the Indian laws when it comes to the transaction. So the ball is now back in Amazon's court. So I would imagine that we will expect and see a lot of other action that Amazon can take. For example, will it be approaching the courts now to make sure that the Singapore ruling is indeed enforced in India? A lot at stake here. Future Group's debt is already over 12,000 crore rupees. Kishore Biani very recently said had no choice but to sell out to Reliance. Could have looked at equity looking back, but didn't do so. All I can say is this is a big battle. Look at the names involved and stay tuned to ET Now. We'll get you every twist and turn.
Okay, well, that's a very heated battle indeed. And all the largest names in the world, representing their own interests. But let's just take something into consideration here. In India, where these laws apply, Amazon might just be out of their jurisdiction. But we'll see, as Nayantara said, how this case eventually closes. And we at ET Now will be the first to bring you every update regarding the twist and the tail, so to speak. But switching gears away from all this head-to-head action, Prateek Agarwal, who's the business head and CIO at ASK Investment Managers, shared his view on the sectoral shift and sectors like pharma, IT, which are really likely to benefit and sustain their momentum going forward. Let's listen in.
So, one trend that we are picking up is that most of the buyers going forward would be adopting a China plus one strategy. In spaces where India has a huge competitive advantage, particularly in chemicals, pharmaceuticals, the companies in India do stand to gain quite a bit from this move, and that's behind our thought of increasing weightage there. Plus, of course, in pharmaceuticals, even the domestic side should deliver sustained growth, particularly in the chronic therapies. IT is not exactly the globalization theme. It is more to do with the fact that businesses would be more okay to offshore work to India rather than getting it done in the US, given that now even in the US people are working from home. And by extension, that home could be a small town in India. So we do believe this is a structural change that could persist even after COVID happens. And that has good, nice, positive margin implications for Indian IT.
Welcome back. You're still watching Buy Now, Sell Now on ET Now. Before we proceed further, quick reminder about our quiz of the day. We asked you which of the following retailers had the lowest revenues in FY20. The options being Trent, ABFRL, V-Mart and Shoppers Stop. You still have about 15 minutes to participate in the quiz by commenting on our Twitter handle, where you can find the quiz having been tweeted. Moving on then to more updates, especially with respect to earnings. While the street was expecting a good quarter, JSW Steel beat those optimistic estimates as well. What is the status of on-ground demand as auto, consumer durable categories are picking up? Has industry managed to clear out all the excess inventory? We asked Sectoral Rao. He's the joint MD and group CFO of JSW Steel. Here's what he said.
Yeah, I think the kind of recovery which we have seen in the Q2 is quite encouraging. Industry as a whole, if I look at it from 1st of April to 30th September, the total amount of inventory that has been liquidated is 1.8 million ton. It is quite substantial. Even JSW Steel, if I look at it, we have reduced our inventory by 4,75,000 tons. So there is liquidation of inventory. This has been caused by good traction from various user industries. Nobody anticipated that the auto industry will come back so robustly. We have seen quarter on quarter, there is 392% growth in the volumes to the auto sector. Even year on year, there is a significant growth in the auto sector. This is the quarter where we have made highest ever sales of coated products. We also have made a very big improvement in the sales to appliances sector, solar, and also government aided projects. So therefore the demand is really picked up. But what is very relevant here is, if I look at quarter one, the fall in demand was more than 50% year on year. Same number if I have to look at in the quarter two, the fall in demand year on year basis was only 10%. So therefore, the improvement month on month or quarter on quarter is very, very encouraging. We expect that the momentum will continue to be there in the Q3 and Q4 also going forward, particularly from the rural sector and also from government aided projects. Plus whatever recovery we are seeing in other segments, they will continue to be there. Because you are comparing the steel prices relative to what it was in the Q1, you compare with the lowest level and then see the steel prices, you feel that it has gone up. But if you look at even Q2, year on year, if I compare the steel prices in the Q2 2021 is lower by 2%, whereas quarter on quarter it went up by 11%. Whereas if you compare the global prices, the way it picked up, from 1st April 2020 to 30th September 2020, international prices of steel went up by 27%, and in this quarter they went up by 16%. So if you compare with the type of increases which have happened globally, vis-a-vis the domestic prices, still domestic prices are at a discount. So you have to look at in the context then saying that whether HR coil prices are at what level.
Important JSW Steel. Let's also quickly get you a short review of what happened with Polycab's Q2 numbers, which are now out. Revenues were down 5.7% to 2,113 versus 2,241. Profit at the same time, however, was up by 14.4% at 221 crore versus 193 crore. EBITDA was up 15% at 312 versus 271, and your margins have improved on the back of cost saving to 14.8 versus 12.1. So good result from them. Street reacted positively. Let's see how that counter holds up for the rest of the week in trade. But back to a big focus area and Nestle's Q2 numbers. We're now going to go across to Vinny, who's going to give us a comprehensive view of what the House views on Nestle are post the Q2. Let's listen in.
So Varun, if you look at Nestle's numbers, they have been a good set of numbers this time in current year, Q3 current year 20. They have managed to report a double-digit growth after a weak quarter last time. So now brokerage firms like CLSA have upgraded their stock's performance from a sell to an outperform for the company with a target price of around 17,650 rupees per share. They believe, that obviously the supply chain constraints and the issues that the company was facing in Q2 current year 20 is surely fading for the company, and this momentum which they're seeing in the revenue is likely to continue going forward, especially obviously aided by overall the in-home consumption trends as well as the conducive setting that is expected also to aid the growth momentum. Also, packaged food items are also something that has been trending, and that is a tailwind for the company. So CLSA believes that the stock will outperform going forward. Even JP Morgan has maintained its overweight stance for the company with a target price of 17,200 per share, looking at overall the domestic revenue growth of the company as well as the capacity expansion of 2,600 rupees, which the company is saying that they will be investing over the next 3 to 4 years, is also a tailwind or a positive sign which JP Morgan sees, and that's why they're maintaining their overweight stance on the company.
Okay, let's move on then. You also have M&M financial numbers coming out. I'll quickly read through the poll. We expect NII to come in at 1,400 crores, PAT at 255 crores, and as far as the factors to watch are concerned, profitability this time around is likely to be impacted because of high provisioning. We expect sequential uptick in disbursements. AUM growth likely to be flat this time around, and improving growth momentum also seen given the recovery of auto volumes. Management has said that demand recovery and pickup has been witnessed as far as disbursements are concerned. Collection efficiency and the update on restructuring will be important to watch out for. The outlook on funding of costs and margins, and finally the change in product mix. These are some factors you'll be watching out for as far as Mahindra Financial is concerned. But Varun, let's talk about big boy Kotak Mahindra Bank. What is expected from its Q2 report card?
Right, Karunya. Later on today, I just found out the presser's at 4 p.m, so that's when we'll know what the numbers are. But it's going to be very comparable to an HDFC Bank's result, right? So why do I say that? Because they managed to grow credit, they managed to grow their deposits. So even for Kotak, the average broker poll on NII, which is net interest income, says 3,780 crore versus last year's 3,300. So nearly 17% credit growth, which is similar to HDFC. Profits are slightly lower YOY, 1,600 versus 1,700. That's because your provision figure is going to remain elevated because of COVID like it has the last quarter. So barring that, your operating profit is growing very well. There's no issue there. 2,900 versus last year's 2,500. So almost 17% operating profit growth as well. So that's a good sign. The brokers are all looking out for what the NIM trajectory will be, whether it can continue upwards from the current 5%, which is one of the highest. It's higher than HDFC's NIM. They're also looking out for the credit cost expectations. So HDFC, Macquarie said 150, 200, 250 bips. Kotak's also being projected at around 150 to 160 bips. If that comes, it's a very good number. So barring this, your asset quality outlook will be important, and any restructuring that may be required from any of the accounts. So we'll keep an eye out for that one. And time for another quick break here on Buy Now, Sell Now. Welcome back to Buy Now, Sell Now. It's 11:45, just past there actually, so you know what time it is. It's time to discuss the BNSN quiz question for today and also tell you who the champions were. Our question was, which of the following retailers had the lowest FY20 revenue? We gave you a host of options. The correct answer, however, just 2 people got it right, is V-Mart. Obviously much smaller than its peers, Trent, Shoppers Stop, and ABRFL. So Karan, Praveen and Shailesh Dubey, these are our 2 winners for today. Congratulations to you. A hearty one at that. You should see your handles flashing on your screens. Please keep tweeting to us on the ET Now handle. We'll be putting out new questions to you daily. And on that note, let's change the tone of discussion a little bit. The Times Network's special investor education series designed to make your investing life better. Nivesh Ke Fande will share important tips on how to better manage your financial portfolio and also guide you by shedding more light on some important aspects of personal finance planning. On this edition, we're looking at market volatility. Let's listen in.
You know, Aisha, I was having a chat with experts on how can everyday investors manage the chop and churn or ups and downs or perhaps peak and troughs, bottom line, the volatility in equity markets.
Yes, I can imagine a lot of investors having that concern. So how should one manage the volatility?
Well, it's quite simple. Think long-term, be patient, and invest via the SIP route in a mutual fund.
You're right. Consistency is the key. In the long term, regular investing really pays off very well, as power of compounding plays a very important role.
Yes, the power of compounding. It is truly magical. What it does, that it really creates wealth in the long term for a patient equity investor.
Yes, Nikunj. After all, equity markets are volatile by nature, and it's this nature of equity markets that actually makes them a source of long-term wealth creation.
And also, Aisha, remember, if you are investing regularly, you are able to bring the rupee cost averaging down, which is there are days you will invest when markets are high. Also, there are days you would invest when markets are low. But in the long term, it will really average out and it will do wonders for your long-term portfolio.
Yes, and over time, the investor ends up benefiting by getting the investments at the average cost of all the SIPs done, thus not having to worry about timing the market at all.
After all, time in the market is more important than timing the market. Hope this edition of Nivesh Ke Fande has helped you gain some insights on how you should go about planning your financial future.
Okay, moving on to some ET Now insights. Financial stocks the world over have been hit hard during this year, but seem to be bouncing back. The Nifty Financial Services Index has outperformed the Nifty 5 weeks in a row. Is there room for more growth? Let's find out. Jayesh is standing by. Let's take it across to him.
The financial stocks seem to be making a comeback, not only just in India but rest of Asia as well. And the first chart will really show you that picture, because the MSCI Asia Financials Index is now set to snap its 7-month underperformance that it has clocked versus the MSCI Asia Index. Not only that, but this is going to be the biggest outperformance month that we've had since 2016. So, the route of 2020 seems to be correcting for the financial stocks in Asian stocks as well. But not only that, the Nifty Financial Services Index also, there's a similar picture that one can paint over there. This is the biggest monthly outperformance that we've seen for the Nifty Financial Services Index in over 5 years. And the second chart will show you that. Now, this is as compared to the Nifty. Also, if you have a look at some of the technicals that we are tracking for the financial services stocks, there seems to be some bit of mean reversion indicators that are available. Firstly, the price performance on a year-to-date basis, all of the stocks belonging to this index have yielded negative return. But in the last 1 week, most of them have been positive. In fact, all of them have been positive except for 4 stocks, and most of those 4 stocks belong to the insurance segment. When it comes to the relative strength index, there is just one stock that is oversold, which is Bajaj Holdings, and you have just one stock which is overbought, and that is HDFC. Lastly, looking at the daily moving averages, HDFC Twins along with Axis Bank have shown some bit of strength because all of them are 10% above their 50-day moving average. When looking at the 200-day moving average, HDFC Twins once again along with Cholamandalam Investment have been surging more than 10% above their 200-day moving average. So definitely early signs of a comeback from the financial stocks.
Okay, that was an interesting one by Jayesh as always. But You know what Gautam Singhania had to say as our country slowly shrugs off the COVID blues. All eyes are on the mega festive season. And clearly that's going to be important to Raymond. On the India development debate, ET now caught up with Raymond Group's CMD Gautam Singhania to understand what his expectations are from this festive season. Let's listen in.
The season, of course, is a sentiment kicker. It sort of improves the sentiment in the market. When there's a festival, there's a reason to shop, a reason to purchase. And I think after the pandemic that's been going on, people have been home for 6 months. Companies have not really had sales for 6 months. So it's very welcome. It's very critical that the season goes well. I think it'll help everybody. So we're all looking forward to it. Having said that, I think the East Puja sales have been good, which is a good, encouraging sign. We're into Navratri, and I wish everybody happy Navratri, and I'm sure that the season will do well.